I realized that something's wrong. It's very profitable to keep people financially uneducated. It's profitable to keep people poor.
What would you say is the main system that keeps people poor then?
Governments want you to be financially uneducated. This is crazy. This is what wealthy people understand. It's all a game. And a lot of people hate. You have to ask the question, who are they working for? Are they working to take care of their employees? Are they working to take care of their customers? Neither. They're working to take care of one person. I have two strategies when it comes to investing my money. I have an active strategy and I have a passive strategy. So that's why I own it. It's not a huge piece of my portfolio, but it's kind of that insurance. That's the way I look at it. It's protection in case everything else goes wrong. Again, I know it's volatile. I know you can see big swings up, big swings down. I don't care. I'm buying it every single day.
The big thing that you wish everyone knew about money before they started making it?
It goes back to, I guess, just the basics. So the first thing is, what is it that you want to achieve in your life financially? And then you have to go out and figure it out yourself, because unfortunately, school will never teach you this stuff.
So you didn't learn this in high school or University of Michigan or
no, never.
Law school? They didn't teach you any of this stuff?
I went through high school, I went through college, I went through 1 year grad school, and then I went through law school, and I never once learned a thing about money. Never once learned a thing about budgeting, never once learned a thing about building wealth, never once learned a thing about investing my money, and never once learned a thing about passive income. Yet here I am today with a law degree, and I haven't worked a single day as an attorney. I saw my parents work their butt off every single day. If my dad got a Saturday and a Sunday off, it was considered a long weekend. And so I didn't get to spend a lot of time with my parents growing up, and they would always tell me that you have to go out and become successful. And I completely agreed, because I wanted to give back to my parents. I wanted to help support them. And I figured, okay, if I want to become successful, I should follow the steps that we're told to become successful. What are those steps? Go to school, get a good degree, get a good job. For me, in my case, it was become a doctor. And along that way, it was in college, I realized that something's wrong. Something's not adding up. And it actually happened. I was studying to get into medical school. And as I was studying, I started reading other business books and financial books. I mean, I want to become a doctor so I can ultimately make money. Now I start having this, I talked about an emotional dilemma. Why am I becoming a doctor? Okay, I want to make my parents happy, check. I want to be successful, check. Do I really want to be a doctor? Maybe. And now I'm starting to question my actual beliefs. Because if I become a doctor, how do you make money? You treat people. I kind of have this entrepreneurial mind. I want to become successful. How do you make more money? You treat more people. So it's like, this kind of runs into a dilemma, because if I'm trying to maximize my income as a doctor, I got to maximize how many patients I see. Maybe that means I don't get to give the best value to each individual patient. But as a human, I want to provide the most value possible. So I started to kind of face this dilemma where maybe I'm becoming a doctor for the wrong reasons.
Interesting.
And then I run this idea by my parents. I don't want to be a doctor.
And they're like,
absolutely not. My dad was angry. My mom was furious. It took my mom about 1.5 years to believe that her son was not going to be a doctor.
Oh man.
But I was like, this is not for me. And I started to realize that there's more to this thing. So now I started to go down this financial education journey. And the more I learned, the more I realized I was lied to. Like, we're taught to go to school, to get a degree, to get a job, so we can then get a job and climb the corporate ladder. But wealthy people don't do that. Wealthy people are not working to climb the corporate ladder, they're working to own the corporate ladder. I didn't even realize that you could do that. Now, you can climb the corporate ladder and work to own the corporate ladder at the same time, but it's a different mindset, right?
Right.
Most of us are taught to get that degree so we can do one thing, climb the corporate ladder, earn a bigger salary. But if you only rely on your salary, you're just one step away from being broke. Because if you lose your job, something happens to you, you can't work, or your company goes down, you lost your salary and now you have no income coming in, and now what? You're scrambling for a job, maybe you have some savings to help take care of you, and now you're trying to figure out how do you make things work. And by then it's too late. This is where you gotta be proactive. And now I'm just like, this is crazy. Why was I never taught this? I was never taught about wealth, I was never taught about investing, I was never taught about this sort of financial education. But why aren't we taught this? And that's when I realized it's very profitable to keep people financially uneducated. It's profitable to keep people poor.
Interesting. What would you say is the main system that keeps people poor then?
It goes down to so many different things. The banks profit when you're financially uneducated because they will keep you saving money in the bank. They'll keep you in consumer debt. If the banks lived by their own advice, which is save money, the banks would be losing money. When you go and deposit $1,000 in the bank, that cash that you deposited is a liability for the bank. An asset is something that puts money in your pocket. A liability is something that takes money away from your pocket. So when the bank has your cash, it's a liability for them. They want to get rid of it as fast as possible. And the way they do that is by lending it out because it's an investment for the bank. They don't want to hold on to cash, but they want you to save your money.
You want you to give them cash.
Right.
And just leave it there.
Leave it there. And what's happening to your cash while it's there is losing value to inflation each and every day. Every day that you keep your cash in the bank, you're becoming poorer each and every day. Now here we are,
8.5%.
8.5%. Yeah. And now people are starting to realize, wow, this inflation is a real problem. And so now when you keep your cash in the bank is paying you 0.01%, maybe 0.5% if you're lucky, and they're turning around lending it for 5%, 6%. And so the bank does not want to keep that cash in savings because it's a liability for them. They want to keep you spending money on their credit card because now they'll get to earn 18 to 25% in interest every time you spend $1. Governments want you to be financially uneducated because when you're financially uneducated, guess what? You are an employee and you're a consumer. Who pays the highest taxes? Employees and consumers. Everybody knows that rich people don't pay taxes. It makes people angry, but a lot of times we don't understand why.
Right.
And we get angry at the wrong things and the wrong reasons. Tax avoidance and tax evading are two similar words with two very different outcomes. This is one of the first things that you learn in law school. Tax evading is illegal.
Yes.
You go to jail.
Yes.
Tax avoiding is legal, and then you get hated for doing that. But this is the way it works.
But you're playing within the rules of the system.
And you know, it's all a game.
Yeah.
And this is what wealthy people understand. It's all a game. And a lot of people hate that, oh, this person's not paying taxes, that person's not paying taxes. But at the end of the day, what you have to remember is somebody else wrote the tax code.
Yeah.
All that people are doing is they're trying to learn, okay, this is what the tax code is, what do I do? And, you know, and then you kind of get into the other philosophical questions. Who's gonna do better with 100 grand, the government or me? And the first real experience of that for me was, I had this event planning company that I started in college. And the reason why I started it was because when I was in high school, I worked at Indian weddings. So I got to know a lot of the DJs.
Right.
And when I was in high school, these DJs were like, hey man, you know a lot of people in high school. How about we host a team party for your friends in high school? I was like, all right, that's fine. You know, why not? Started this little team party business in high school, and I go to college. Don't know what to expect because my parents didn't go to university here. I think everybody goes to college to study hard and become this big thing in college. I get to college and everybody is partying.
Yeah.
They're blowing their money that they don't have on alcohol. They're drinking. I don't drink. I don't smoke. I'm not into that party scene, but I need something to do on Friday nights. So I was like, why don't I just take this team party business that I had in high school, bring it to college? And that's what I did. My freshman year, I was 17 years old. I started knocking on the door of every club, venue, bar, restaurant, asking if I could host a party here. Some would say, yeah, it's gonna cost you $10,000. Some would say, yeah, it's gonna cost you 20 grand. I don't have that money.
Right.
But then one or two said, you can do it here. We're not gonna charge you a penny. Just give us half of the cover charge, half of the money that you bring in. Mm-hmm. I said, okay, now I'm in business. So I started making a little bit of money doing this, and I had some cash saved up. And I'm starting to read these business books, and every business book said, wealthy people invest in real estate. Mm-hmm. I don't know what that means. I don't know any real estate investors. My parents aren't investors. And so I was like, okay, if wealthy people invest in real estate, maybe I should invest in real estate. Uh-huh. And this was right after the 2008 crash, and I'm in Michigan, mm-hmm. where real estate was hit extremely hard. So I was like, all right, you know, I would like to invest in real estate. I'm studying for my medical college admission test. I start going to Google because I'm bored while I'm studying for this exam. I'm reading about the Forbes richest people. None of them are doctors. None of them are people that work the traditional path. And you know, I have this idea to start investing in real estate, so I started looking at real estate in between my study sessions. And on August 22nd, I took the medical college admission test, the MCAT, and On August 23rd, I closed on my first real estate investment property.
Wow, how old were you?
I was 19.
Holy cow.
It was $8,000.
What was the investment?
Was the price of the condo.
The condo was $8 grand?
$8 grand.
How'd you get a condo for $8 grand?
This is right after the 2008 crash.
Wow, you got it on foreclosure or what?
It was out of foreclosure. That same condo was selling for about 150 grand just a few years prior.
Come on.
Yeah, and so I came in. It was actually listed on sale for $8,400. I made an offer for $4,000. They came down to $7,000, and I was still trying to push them lower, but then they said they had another offer on the table. I didn't want to lose it, so I said, I'll give you $8 grand, right?
Wow.
So I bought it for $8 grand, put in a few $1,000s worth of work, and I leased it for $600 a month. And now all of a sudden, my mind was blown because I kind of had this idea of what entrepreneurship was. I had never heard that term until I came to college, but I was running this event planning company, and I'm starting to learn about this thing called entrepreneurship. And now I have this condo that's generating me this like almost passive income. I say almost because I was making a lot of mistakes in the beginning. But now I'm like, wow, this investing thing is very unique. So real estate is one of the best tax games for investors. That's one of the reasons why wealthy people love investing in real estate, because not only can you get cash flow, but you also get tax benefits.
What do you wish we taught everyone?
Sure.
5 different things around money.
First thing would be, what is money? Because money, as we know it, is fake. Our dollars are just pieces of paper. I grew up thinking that our paper dollars are like the holy grail. You want to save this money because it is the most valuable thing there is. As I became older, I started to realize that that's not the case. Our paper dollars are just pieces of paper. It's fiat currency, which means it's issued by the government, and the value is backed through the strength of the government. Now, we're lucky here that the United States is the world's superpower. We have the world's strongest military. We have the world's strongest economy. But we can't stay on top forever. And, inflation is when the value of your dollar goes down. So these dollars, which, if we hoard this, we'll become wealthy, save your money to wealth, is actually keeping you poor, and it's making you poor each and every day. So the first thing you have to understand is, what is money? The second thing you have to understand is, what do wealthy people work for? And most of us, the majority of us, are taught to work to get a job and climb that corporate ladder, but wealthy people are doing something completely different. They're working to own the corporate ladder. They're working for something called equity. And this thing really blew my mind, because wealthy people are not working for that paycheck. They're working to own a piece of the company. That way they can get a piece of the profits. So the best way to understand this is, a lot of times people complain about how much money I'm making. I wish my boss paid me more. And this is where, if you start to understand the system, you'll start to ask the right questions. See, a big company, you have to ask the question, who are they working for? Are they working to take care of their employees? Are they working to take care of their customers? Neither. They're working to take care of one person, their shareholders. It's this concept called fiduciary duty.
Right.
I learned this in law school. The executives of a company have a fiduciary duty, not towards the employees, not towards the customers, but towards the shareholders, the owners of the company. Now, what that means, an easy example of this is, you're going out to dinner with your girlfriend or your wife, and you're on a date, and you get a text from one of your good friends, say, hey, let's go play Fortnite right now. Your fiduciary duty at the moment is to be with your girlfriend, to be with your wife, to be with your partner, to spend time with him or her. If you go out and leave, you're gonna get in trouble, right?
Yeah.
So it's, who is your alliance to? And the shareholders, the executives, CEO and the executives company, their fiduciary duty is to the shareholders, the owners of the company. So what are they trying to do? They're working to drive up the valuation of the company. So how do you get that equity, that ownership? You have to own a piece of the corporate ladder. Now, if you work for a public company, that means that you can take some of your income and you can buy stock in the company. Maybe they pay you with equity. Maybe they give you some sort of revenue share. That's what we do in my companies. Or if your company doesn't do that, then you have to start taking this money that you're earning and you have to start investing it into a place where you're getting equity. Maybe that means stocks. Maybe that means real estate. It could be, there's a number of different investments, but you have to work towards that equity.
Yeah.
The third thing is that you have to think bigger. I know I grew up thinking that somebody who looks like me, somebody who's brown, somebody who wears a turban, somebody who didn't have entrepreneur, investor parents could go out and do this. Because you think that somebody like me can't do this. My parents also told me that I couldn't do it. I didn't know anybody doing it. I didn't know any investors. But you have to be the one to take that first step. And once you start to take that first step, you're gonna learn and see the second step. And you take the second step and you're like, oh, I can start $100 investment here. You don't have to start with hundreds of thousands or millions of dollars. Start with $100. Apps on the internet make it so much more accessible.
Right.
But anything is possible. You have to go out and start learning. You have to go out and start doing. And then the next thing that you have to do,
Number four,
is you have to understand the concept of debt. Because we live in this consumer culture. And it's interesting where we want to live this flex lifestyle, right? I want to show off on Instagram. I want to show off my new car, my new Chanel, Gucci purse. And we kind of get caught up where I need to live a certain lifestyle that way people can think that I'm rich. And so if you don't have the cash to do it, people are going into debt to buy it, and it's becoming easier and easier because of now things like buy now, pay later.
Right.
It is one of the fastest growing industries in fintech. I love financial technology, but it breaks my heart. I mean, it rips my heartstrings when I see the growth of this buy now, pay later. You have to break out of that mindset.
So what do we need to know about debt then? How do people get comfortable understanding about debt, either using it in the right ways and eliminating the debts that don't support our financial growth?
Yeah, so the first thing is never finance anything that isn't gonna pay you. I realized that the power of compounding your money. I realized the power of putting your money into the right assets, and I'm like, this is my time to build. I've been blowing this money that I'm earning on things that are making everybody else rich.
Right.
I'll spend money on that stuff a little bit later. Right now, I want to make myself rich.
Yeah.
And so, you have to just first understand what it is that's worth spending money on and what's not. And then, if you do have that debt, you've got to come up with a strategy to pay it down as fast as possible.
Is there ever a time where people should go into debt, the right type of debt? The credit card debt, student loan debt, buying a car and going in debt on that, those things I'm understanding, it's not helping your financial future.
Yeah.
When is it the right time, or is there a right time in your mind to take money out and spend interest on that money?
Depends, right? If it's something that's gonna make you income and you can manage the debt, then yes. But it's not for everybody.
Right.
Some people don't have it in them to manage the debt. Some people don't have it in them to manage investments. Some people don't have it in them to run a business. If you're not the entrepreneurial investor type and you don't like looking at numbers, you don't like managing money, you don't like trying to grow this, stay away from it. Now you go up, maybe you can get debt to buy a home, but that's it. But if you are more the entrepreneurial type, you have it in you that you want to grow. Now, if you're using debt, you should only be using debt to buy something that's paying you with income, something that's going to make you more money.
Do you have any debt out right now?
Right now, I do not. And the reason is because I'm waiting for the right opportunity. I will have more debt.
Really?
Yeah, I'm just waiting for the right opportunity because right now all my real estate is paid off.
How much could you sell that for now?
Probably 100,000, 120. I mean, I don't know the exact, but something in that range.
It's not bad.
Yeah, I mean, it's crazy because when I buy real estate, I never look at what can I sell this property for. I'm looking for one thing: cash flow.
Cash flow, yeah.
And so this is a big mistake that leads people into a lot of problems in real estate, because when you start buying real estate, hoping that you'll be able to sell it for a higher price in the future, and things don't go as planned, then what?
Yeah, you're screwed.
Now you're screwed. So, for me, I look at one thing, cash flow, and will I be able to see more growth in this area? So I look where businesses are moving, where's money moving to, and then that's where I want to invest, because I know if property prices go up, hey, it's icing. Property prices go down, it's okay. I still got my rent, which is covering my costs.
Okay, so understanding debt was the fourth thing. What was the fifth thing you wish people learned about money?
You have to be willing to make mistakes, take risks, and start. And this one is hard, and it sounds simple, but a lot of people that I know, they are so hesitant to making that first investment because what if I do something wrong? What if I make a mistake? What if my investment goes down? And so the simple thing
that's happened to me multiple times.
Yeah, but you learn every time, right?
Yeah.
It's your tuition. It's your real tuition. And you have to be willing to try things, because if you don't, you're gonna get stuck in the game of what if. I have two strategies when it comes to investing my money. I have an active strategy and I have a passive strategy. I'll start with the passive strategy because that's easy to understand. If I have 50 grand of cash, would I rather save and bury that 50 grand of cash in my backyard, or bury 50 grand of gold in my backyard? I'd rather bury the gold because I know that 50 grand of cash is guaranteed to lose value every single day. Gold is a store of value because it takes time, effort, and labor to mine physical gold. And that time, effort, and labor is represented through the physical piece of gold. So that's why I own it. It's not a huge piece of my portfolio, but it's kind of that insurance. That's the way I look at it. It's protection in case everything else goes wrong, that I have some physical gold. So I have that. And then I have my cryptocurrencies. Now I'm mainly in Bitcoin. I have some Ethereum, a couple other coins, but mainly Bitcoin, and every day I buy a little bit of cryptocurrency. Again, I know it's volatile. I know you can see big swings up, big swings down. I don't care. I'm buying it every single day. So that's my passive strategy, where it doesn't matter what's going on in the market. I'm just gonna keep buying no matter what's going on. Then my active strategy is now where I do more of the fundamental analysis, where I understand where am I actually investing my money. So this requires much more time and more effort on my end. So on the real estate side, I'm looking for deals that are paying me that 7% cash on cash return. In the stock market, rather similar. I'm looking for companies that I believe in, that I believe are good fundamentally. Fundamentally means looking at the numbers, right? What do the revenues look like? Have the revenues been growing? How fast are they growing? 10% a year, 20% a year? What about the profits? But you also have to look a little bit deeper than just the profits, because you want to see what's going on with the expenses. Where are they investing? Are their expenses going up because the cost of business is becoming more expensive? Or are the expenses rising because they're investing more in their company? So you got to do a little bit of digging in there. And then in startups, obviously I invest in my own companies, but I also invest in startup companies. I love entrepreneurship. I am a huge fan of entrepreneurs. I love supporting other entrepreneurs because I never had that support when I was getting started as an entrepreneur. So one of the ways I can provide the support is through money, through investing in some of these entrepreneurs. So first step is understanding it's possible. Then you start learning, then you start doing, you start making mistakes, and then you learn from your mistakes and you fix them. But until you break through that mindset and you realize that it is possible, I can do this, no matter where I come from, what I look like, what my background is, it's possible, but I need the right education. YouTube has made it so much more accessible. Read books, start learning, and then you start taking steps. It's not gonna happen overnight, but you'll start taking steps towards that.
Right.
And so it's about building that growth mindset of understanding that there's something that you can do. Be willing to make mistakes, try. Anything is possible, but you have to be willing to try, make mistakes, and keep getting better each and every day.